Hello and welcome to today's Fat Tell Daily. I am laughing, Nick's smirking because I got flies buzzing around me. For those that don't know, I've got this plant in my office and I think I might have to start a fly infection. It's disgusting. How you doing, Nick? You got inheritance tax on your mind, haven't you?
That's right, yeah. And I'm doing a lot better than you, even though I've got actually the bank next door is being demolished as we record. Um, as you can imagine, this is some sort of weird fantasy of mine ever since hating banks because of the financial crisis. So I'm in a good
And
mood.
now
And
you're actually seeing one get
you're in a
demolished,
bad
yeah.
one.
Yeah, right. But your piece today is it's quite far-reaching. You're talking about, well, you for those that don't know, you also work for our UK sister company or affiliate, South Bank Investment Research, and you've noticed a lot of things going on there. I know the Labour government, like here, has just taken over, and they're messing with the tax stuff over there. But I think they're finding. Well, you tell me the story. You've written about it in today's Fat Tell Daily.
Yeah, it's another one of our fantasies as free market believers, right? There's this weird idea that was only ever supposed to be theoretical. It was only ever supposed to be something that free market politicians and economists mentioned. That you can raise taxes but end up with less tax revenue as a result.
So it was
And
never proven. I just thought it was.
well, it's debatable, right? It's like a theoretical
Right.
academic debate. It's obviously true in the extreme. Like if you have 100% tax rates, then nobody's going to
Yeah.
report their earnings. The question was, where is the point at which increasing taxes results in less revenue? Because if you're
Yeah.
very
Right.
far away from that point, then in the future you can still increase tax revenues very easily by increasing tax rates, right? So it was thought that this theoretical point was a long way in the future, with many more tax increases to come. But the Labour government in the UK has discovered that its most recent tax proposals might actually cut tax revenue. And this is according to analysis from their own treasury. So it's from a bunch of civil servants. And they've pointed out that if you really do increase these taxes as planned, and there's three of them that have been focused on, they might actually result in less revenue because people will leave the country, people will stop spending money as they do currently, people will stop investing as they do currently, and so the net effect could actually be cut in the overall tax revenue. And the whole point here is that they've got this fiscal black hole that they're trying to fill. They're borrowing too much money according to arbitrary rules. And my question is, in today's piece, is what if this is a sign of a much more broad and general trend for governments around the world? It's not just the British government that's encountering this, where future tax increases that were presumed to get us out of financial trouble in all these over-indebted countries might not actually work. There might not be more tax revenue that can be gained by increasing taxes even further. And what does the world look like, especially politics and investing, if that's the case?
I'm sure in the 70s, just before the UK went in 1976, before they went cap in hand to the IMF for an emergency loan, taxes were stupidly high then, and that's when you had the Beatles and the Rolling Stones actually, and probably loads more other people that had loads of money, just getting out of there. So I thought it was
Yeah, we
already
should
dead
have
proven, but
that
maybe you're
song.
right. Maybe there's a point at which. Sorry.
Yeah, we should have that song from the Beatles about the tax man playing in the background. But it was never quite understood where that point is, especially because obviously the economy's radically changed since then, right? And tax rates
Yeah.
have too, but and also the tax brackets. So what percent of people actually within the brackets, and also Labour's a lot more mobile, and investment capital's a lot more mobile. So the world's changed a lot since then, and actually tax rates are much lower. But what really needs to be measured is the tax take as a percent of GDP. So how much of GDP is being collected in taxes? And actually, Australia is not far behind the UK by that measure. So we may, although we have less of a debt problem, we may be at similar points on this curve, this idea that increasing tax revenues increasing tax rates might not necessarily get you more revenue.
How do you think that realization will actually impact any policies in other countries, like particularly Australia, seeing as that's where we are?
Yeah, I think the UK is a warning for everyone. Australia is probably the last country to experience what the consequences might be. And what I argue in today's piece is that Australian investors need to watch what happens in places like the UK, given at some point in the future we will be stuck in that position. So if we can learn from what happens in markets and in politics from countries like the UK, then we can find out what's going to happen in Australia eventually. There's also bigger investment trends at work. But my key point, first of all, is that if you can no longer use tax rates as the lever with which to control tax revenue, because you've hit the maximum point of tax rates causing more revenue, then the only thing left is spending cuts, right? That's all that they can do. They can inflate away the debt, but that's the central bank's doing. But
Yeah.
the idea that it's no longer going to be increasing tax rates that allows governments to try and restore some fiscal sanity. It's going to have to be spending cuts instead, would radically change things in markets. So, for example,
Yeah.
you shouldn't be owning stocks in the companies that rely on government spending if you're anticipating government spending to either fall or grow a lot less slowly than we're currently assuming it will. So, if the British government, and this has already happened to some extent, but if they decide, well, raising taxes isn't working because it results in this revenue, we're going to have to cut spending. And so they're going to have, first of all, politics is going to change radically, right? Which has also happened in the UK. They've cut the winter fuel allowance for pensioners, which has caused an absolutely massive outcry. But the point being that they're going to have to find similar spending cuts in coming years. It's probably going to be in places that will affect the stock market. It might be energy companies, it might be the defense companies, it might be healthcare companies, who knows? But that's what the investment takeaway is here. That if we've transitioned to a world where instead of focusing on tax rates, we're going to focus on spending cuts, then it's going to hit the stock market.
Yeah, you actually, you do in the article mention defence, infrastructure, and healthcare. Which is there any one in particular you think is most at risk, and why, and potentially something to watch out for?
Well, this
On
is
the
such a long-term
investment
trend.
front?
It's very difficult. It's very difficult to figure. It's so difficult to figure that out. So one of the things I mentioned in the article is I think foreign aid is going to be cut by governments in the Western world quite dramatically. I think voters are going to demand that their government stop sending money overseas to other governments. And I think that's going to be felt in the defense stock sector because a lot of foreign aid from our Western governments actually ends up in the pockets of the defense companies that are in those countries. A lot of foreign aid is spent on buying guns, weapons from the countries that are providing the foreign aid in the first place, which is downright bizarre. But the point being that if foreign aid is cut as one of the lowest priority spending options, then that should hit the defense sector in the big economies, especially the US. But also we've got some defense stocks in Australia. So I think that's one example of a sort of investment thesis that is going to arise out of this in coming years, that people need to start thinking about, well, what sectors of government spending are most likely to be cut and how would this impact the companies that operate in those different sectors.
How might, and you mentioned the initiative to net zero, but you mention it in terms of how you view it in the newsletter that you publish, Strategic Intelligence, and how obviously you're very sceptical about that whole target. But that's a lot where spending goes, right? How will that affect, if at all, those kind of policies from governments across the West?
Yeah, this is a tough one because there's a lot going on in net zero, right? It's all built on the climate change idea in the first place, which a lot of voters are turning against. The absolutely extraordinary cost, which used to be quite well hidden by governments, has now sort of been exposed. And the idea that the economies in countries that are pursuing net zero end up with higher electricity prices and more costs has been exposed. So perhaps governments will try and sort of rein in that spending and the green energy bubble will burst, but that's already happened to a great extent. The green energy sector has performed absolutely horrifically. the infrastructure sector on the back of green energy is doing quite well right now. So, for example, the cable companies, these high voltage subsea cable companies, are absolutely raking it in. So those might find themselves high and dry with no orders all of a sudden as government sort of pares back spending. But I think net zero might be quite high on the list of priorities for politicians, unless they go all out on nuclear. And I think, well, I'm sure we can all disagree on which particular things are most likely to be cut by governments in coming years. And, that argument is almost separate, right? If you agree with me that government spending is going to have to get pared back because tax raises are no longer going to raise the revenue, you should be deciding for yourself where you think politics is going to go in that, and figuring out for yourself where those cuts will be. Personally, I don't think net zero will be top of the list. I think the basic realities of net zero are why that will fail anyway. And the sectors that I would focus on would be government and these big infrastructure projects that are not tied to net zero, things like big toll roads and things like that. Maybe that's just because I'm here in Japan and they seem to be building large infrastructure projects in places without lots of population growth or even in population decline, which has always mystified me. But they've ended up in this massive debt crisis as a result. So I think there's big change coming there. So infrastructure is another one that I highlight. And the healthcare, the one that I was in two minds about, because the healthcare spending is going to have to balloon because of the aging population, so on and so forth. But it's also, that means it's unaffordable, right? If we're spending more per person and a lot more people, with less taxpayers to pay for all this, then maybe healthcare spending is going to have to be cut because it's just not affordable to have so much high quality healthcare for so many people with so few taxpayers paying for it. So maybe that sector will struggle as well, especially in Australia, because we spend so much on healthcare with so many people employed in the sector.
Yeah, so there are a few things that you're like that you can't see them cutting back spending, or they won't be at the top of the list. But you also do suggest that this shift could lead to a radical shift in government policy in the coming decades. So just a final question, what specific changes do you anticipate, and how might investors prepare for that potential outcome or reality?
It's difficult to understand how politics would have to change in order for a politician to get elected based on spending cuts, right? There aren't really any historical examples.
They go with what people want to hear, right? A lot of the time.
Yeah, and so I can't really imagine what does the type of politician who is a fiscal conservative, a genuine one, what do they favour and not favour, right? So that's where it's a big question. I think defence is the big one, because I think someone who believes that their country is too indebted to spend money on basic necessities like healthcare is probably not going to go on a foreign adventure with the military, right? They're probably not going to say we won't need to sustain military spending. So that's where I think defence would be the top one. Unless there's some sort of massive geopolitical crisis, it's quite difficult to convince the voter that we need to sustain defence spending while cutting social or welfare healthcare spending. So I think defence is the biggest one. Also, I think a lot of pro-economic growth policies might make a big comeback. So, for example, a lot of the constraints that are placed on energy companies at the moment, fossil fuel energy companies, might be removed, because while the net zero sector, the green energy sector, costs money in terms of subsidies, the fossil fuel sector earns the government a lot of money. The same for commodities. I think the noose around mining companies' necks might be loosened significantly by a government that decides we need to prioritize revenue by unleashing the economy, because the alternative is spending cuts. So it's not just about tax rates, it's also about the tax base.
Final question. This is all longer term trend stuff. What do you can you give readers what, from an investment point of view, what you're looking at in your paid letter, Strategic Intelligence? I know your colleague Jim Rickards, so this is slightly off topic from the tax question you raised today, but Jim's obviously very occupied with the US election. What are you looking at from your end in Strategic Intelligence at the moment?
I think there's some angles in the nuclear story which we're not positioned for yet. So we called the nuclear boom that's playing out right now really early and got into some good positions on that. The nuclear restarts which are happening right now in the US have moved forward the boom in demand for uranium to a lot earlier than I expected. And also, they've created the need for a lot of nuclear waste management. So at the moment, I'm spending some time looking at the sort of the various different ways of profiting from the nuclear energy boom that we don't yet have added to the portfolio at Strategic Intelligence. So we've already got the uranium angle, we've already got this a small modular reactor angle twice over, which has performed really well. I want to be adding things like the waste, the actual construction of the large-scale nuclear resources, and possibly some energy companies that are going to be selling stable power at peak demand times when renewable energies are not producing, because the revenue for them should be massive.
Cool, interesting. Let us know what you think on this. I've actually got set up an email now. It's letters@fattail.com.au. Chuck me a note. Woody, I'm the publisher here at Fattail. Let me know if any of this stuff interests you. Hope it does. And ask any questions, and I'll get to Nick and our other editors, and we can make that a discussion for a future video. Nick, thank you for the time. Hope the building doesn't create too much of a dust storm as it gets demolished. And maybe a few banknotes will come out of it that you can, I don't know, buy some beer with or something, or some ramen. I don't know, whatever you're into.
Woody, you and I both know banks don't have the money that they owe to depositors. That's the whole point of fractional reserve banking. There's nothing in there.
That's a good point. Okay, mate. Well, we'll leave it there. Thank you very much. Link below to Nick's direct article today. Hope you enjoyed it. Take care, and I'll see you very soon. Nick, see you next week.